The most complicated skill is to be simple. That's what we focus on every day here at Charting Wealth, is keeping things simple and straightforward, but highly accurate. We have a special training for you that we've done today. We've been doing a bunch of them lately, I think 9 over the last 12 days for you. Consistency and reliability, not complexity and quantity, is all you are seeking. That is what the video training is all about. It's in your show notes if you are a subscriber at chartingwealth.com for free. If you aren't, go there and sign up. Put in your first name and your email address, and you'll receive every day our daily review, along with once a week what you're listening to right now, our comprehensive review and forecast. We look over what happened over the prior week and where these charts are and where they may be going over the next week. We look at the big developing trends and basically give you a Monday morning quarterback as to what happened over the course of the prior week. Don't forget our book is available. You'll see a link in the show notes. And when you subscribe at chartingwealth.com, that's what you get, are those show notes every single day. Please also, if you listen to us on YouTube, do on the right-hand side at the bottom, click and subscribe. That helps us out so much also. And again, if you live overseas, just email us, cw@chartingwealth.com. We'll get a book out to you, get you a PayPal invoice, pay that. We'll send your book to you wherever you are in the world. If you're in the States, there's a link. You can go through Square and buy that book. We'll get it shipped out to you, an autographed copy just for you, Charting Your Way to Wealth. Thank you for all the great responses we've received. Even in this tough month of October, we have had some fantastic practice trades, both on the Qs this past week, starting on last Friday when we had that weekly vertical crossover going up, and on 20-year bonds that have been trading for a while going down. That would have been TBF, Tango Bravo Foxtrot. That is the inverse fund for TLT. We'll talk a little bit more about that when we get there. Let's start, as we always do, with the S&P 500 weekly vertical crossover going up. For all those who said last week there's no way that's going to work on the Qs, well, it did. The Qs up again today, 0.91%, almost a full percent. And now we have a weekly vertical crossover on the S&P 500. It's taken a while, but it finally took place, and we have noted that. So we're going to take out the old down trend line. We're going to go ahead, well, tell you what we'll do. We'll switch that over. What I'm doing for the folks that are watching live, I am literally using the fantastic software that we use here all the time at the show. It is provided to us by TC2000. If you wish to subscribe, you want to get serious about what we do, then of course go ahead and subscribe to TC2000. It's the paid version of the free stockcharts.com. We encourage you to practice, and of course when you get ready to get serious, go ahead and subscribe to the full version, TC2000. We have $25 off. You'll see the link in the show notes if you want to go ahead and subscribe. So we see that the price percent oscillator is heading up now that it has crossed over. Derivative oscillator going into its third week of up movement. Nice strong up movement. Nice strong green up candle with a wick on top for the week. We go from the weekly to the 2-day. We see that we had that 2-day crossover back on the 18th, and we continue to have strong up movement. We see that we finished this latest 2-day candle at the close of the market on Friday. It's another strong up candle. Things are continuing to move. That is nice to see. We'll tighten that up a little bit. I think we want to connect 3 candles, which we can connect the 3 candles, the last 3. So 6 days of stair-step up movement, consistent. That is good to see. And we go to the 4-hour chart. What do we see there? We saw things really sliding sideways, tightening up. Now again, typically when you get a sideways slide like that, there's going to be a pop one way or the other. Which way were we leaning? Well, of course, to a pop on the upside, which is exactly what happened. Up in the morning, further up in the afternoon. Now, of course, your buy-in point for a practice trade with the crossover going up on the S&P 500, was at 355. On Friday afternoon, that was your jumping in point. If you did not jump in or there was a reason you did not feel comfortable doing so, then of course on Monday morning after idiot hour, which is that first hour of trading, and the reason we call it affectionately idiot hours, the market makers are in charge of a lot of the price setting as the market starts off, and the people who unwisely put in market orders find themselves bought or sold in at not so favorable prices many times. That's why we never practice trade anything with a market order. It's always a good till canceled, or it's always a limit order. We always put in, when we place that limit order, we always put in a good till canceled sell order at the percentage we've set for the gain we want on the purchase we made in that practice trade. You want to know more about all these things? They're covered in our book, Charting Your Way to Wealth, and all the trainings we have at the website and the YouTube channel. So that's where we are on the S&P 500. Hope that you've started your practice trade on that already. We will see how it goes. Now we'll go to the current successful trade that we have going on the Qs. We had a weekly vertical crossover take place last Friday, the 25th of October, and we have a great green up candle to show for it. 3 weeks now of up movement on the derivative oscillator, and just finished the first week of up movement on the price percent oscillator, which is, of course, that always keys us. That second one, the price percent oscillator, is our master indicator. It keys us into big changes in trends, and the weekly is typically our biggest change in trend that we follow, and we see it continuing to move up quite nicely. Again, up for the day, 0.91%. Go to that 2-day chart. What do we see there? Well, we see that we've completed another green up candle with higher highs. We didn't have that with the prior candle ending Wednesday the 30th. It did not reach a higher high than it had previously on that Friday and Monday candle, the 25th and the 28th of October. So we're glad to see more up movement, derivative oscillator gaining upward momentum, price percent oscillator heading up quite strongly. That's good. What do we see on that 4-hour chart? We'd seen that sideways slide, a little bit of drooping there, and then popped up in the morning and the afternoon, reaching higher highs, derivative oscillator gaining momentum. And the price percent oscillator bouncing off that red signal line, heading up. Quite good to see. So we still have that Q's trade in effect. Remember, take profits at any time. And again, I know a lot of folks are weary about the market. How long can it continue to move up? Well, as long as it does, my friends. We can't forecast it. We can just follow the trends. Have your continue with however you do it, with a trailing stop, whatever it is you're doing to lock in your profits as you move forward. Pay close attention to what's going on and take profits when you hit those profit points or you see weaknesses in the market. I know a lot of folks jumped into practice trades last Friday and were out with significant profits by this past Monday. So good for you. Let's go on to bonds, leaving stocks. And of course, what we see happening here is we have ended the week with a green spinning top. Now that's a solid green. That's not an open box. That means a slowdown in the down movement. If it were a green open box, of course, it would mean up movement, and depending on how big the candle is and the wick on top, strong up movement. But we see a spinning top means indecision, tending down, sitting right there at the weekly trend line, still moving down as far as the price percent oscillator goes. Derivative oscillator lost a little bit of energy, so we go from the weekly to the 2-day, and of course, this latest 2-day candle is a green up candle, paired off a little bit of that up movement because it was a down day for the second day of that candle. Again, 0.48%, just above the weekly trend line, well above the 2-day trend line, which we're going to have to redraw when we have an opportunity to do so. That, of course, would happen going up at some point there will be a crossover going up. that's when we would redraw that in the opposite direction. We'll just leave it where it is right now. We see the derivative oscillator losing downward momentum, price percent oscillator heading up, but still confirmed down moves on both the weekly and the 2-day. So the overall trend and sentiment in the market with bonds is still down since we don't have a crossover either on the weekly, which is our biggest indicator, or even the 2-day. Now we go to the 4-hour chart. And of course, we saw things over the last 2 days bounding up. They're slowly rolling off. And again, not a great deal of down movement, nowhere making up for that big up movement over the prior 2 days. That was both Wednesday and Thursday. Derivative oscillator still gaining momentum. Price percent oscillator still heading up. We did have a great trade in 20-year bonds. Hopefully you took profits all along the way or cashed out your practice trade earlier. If you're still in, of course, you still have the weekly and the 2-day moving in the right direction. You have a significant pullback and a penetration of 2 trend lines, which is important. But again, let's watch and see if we have that 4-hour crossover going down at some point over the next week. Might have another jumping in point for continued down movement in bonds. Do pay close attention to that 137 mark, which appears to be where bonds are sort of dropping to and holding. So we'll see what the next week has in store for us with bonds. We're pegged for more potential down movement. Now, what's gold up to? Up for the day, 0.09%. We look at gold on this weekly chart, and it's really been moving sideways pretty much for many weeks now. Ended the week with a green open box spinning top. Indecision tending up is what that's telling us. We're still the overall sentiment on that weekly. Price percent oscillator is down. Derivative oscillator still negative. Lost some more downward momentum this week. We go to the 2-day chart. Hasn't crossed over going up. So again, sentiment on the 2-day is still down, but we did have a big green up candle for these last 2 days. And look, the derivative oscillator flipped over to green. So we'll keep our eye on gold, see which way it's going. Don't know yet. Don't have a trade yet. Because, of course, this 4-hour chart continues to spike up on us, so we'll wait and see what there is to see. That 4-hour chart rotates over strongly down, might give you a possibility to jump into a trade going down, but just going to have to let gold sort its way out at this point. That's where we are as we end the week. We sure hope that you are practice trading as often as possible and seeing great successes. Do want you to have the book if you don't have it. And Patreon members, we sure appreciate your support. We're going to have actually a Patreon question and answer session coming up here in November. Emails will be going out to you on that Wednesday date, time, call-in number, all those things. And please get in any questions you have for the Q&A. Again, in-depth training we offer to our Patreon supporters. If you want to know more about Patreon membership, please follow the link in the show notes. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.